I got it. Today is Tuesday, 3 p.m. And today is a conversation day between me and that famous Catherine. Remember, I always said that I have a librarian behind me and whatever we do, and it's Catherine is the one that really does the research, making sure that the session is running. And right here, we want to let you know that we are doing our other languages webinar and starting soon. We kind of stopped that for the tax season. Now we're picking it right up. We're going to offer the Chinese webinars and also Spanish webinars very soon. Every Monday, it will be the Chinese, and on Friday will be the Spanish. And of course, on Tuesday right now, we're doing it in English, right? And even though this is my second language, not Kat, and Catherine, yay, he's a real American. Can you tell? You know, and then of course on Thursday, Catherine always have this outside of box webinar that she provides, and trust me, I am the audience for those sessions because some of those sessions that she has was really knowledgeable from other people who are affiliated, who are the supporter of the community, and also you know, we have a good professional worker relationship, and those are the people and we bring on board and to have them give us outside of the box knowledge than what we have. On Saturday is our webinar, is my webinar. For that 1 hour, we introduce concept, we spread out knowledge, and we make you smart and smarter than us. And you don't imagine that, oh, you are teaching, you must be the smartest. No, are you kidding me? And I am teaching just because I'm planting the seeds. We are planting the seeds in your mind, and you will become enchanted forest one day because you grew with that knowledge. So that's what we want to see. So today, Kat and I, we want to talk about things around nonprofit. It's so mysterious, right? Someone has a nonprofit. My neighbor has a nonprofit. Or this nonprofit is doing so big things, but other ones doesn't. United Way is nonprofit, ladies and gentlemen. I mean, United Way can, you know, can spend a lot of money on supporting other nonprofits. So understand nonprofit in the very layman term, knows that how to do it, how that affiliate with you. I think it's going to help you. So I and Kat just going to dialogue. We're going to talk about nonprofit, and you know, Kat also manages Immigrant Entrepreneur Summit, and this nonprofit IESUSA.org has an event coming up on May 23rd. I'll have Kat just tell you a nonprofit organize a nonprofit event. What does that mean? Kat will tell you that. Right, Kat?
Yes, I will for sure. So in terms of a nonprofit event, a lot of times it is similar to any event that a corporation would host, right? Except that we are doing that to give back to the community. The nonprofit always has a mission that it strives towards. And so for the Immigrant Entrepreneur Summit, this is to bring people together to learn, share, and grow in the immigrant entrepreneurial space. And that's what the whole conference is based around. So we gather people together in a group, and we have learning sessions. There are different vendors that come to support the event, and then tickets still happen, so people can pay for a ticket. But another piece that is unique to nonprofits is that we also get funds through sponsorships, so that is as donations, correct? So,
right. So from participant standpoint, as if you participate in a nonprofit event, most of the time when they sell you the ticket you pay, and it will already tell you that this ticket is a donation, or this ticket, maybe half of it is a donation, the other half is the cost of the food. So, you know, as a participant, your mileage to that event is also tax deductible. You know, now you kind of hear me as a tax person again talking about taxes. But of course, everywhere we go, even if you fix your shoelace on the street, and that is, and we can discover on the tax side of things related to that small action. So you participate in the nonprofit, your mileage, your hotel. For example, we have a lot of people are coming from Iowa area to attend Bloomington, Minnesota IES, and your hotel, your mileage is deductible. Okay, just keep that in mind. And what about the donor? What about the people, the companies that give money to IES? For example, Wells Fargo. Wells Fargo is our strong supporter of Immigrant Entrepreneur Summit, and that company will write a check to Immigrant Entrepreneur Summit, says, here you go, we want to support you. And you can put out this event without worried about you don't have money to do it. And when they do that for Wells Fargo, the amount they contributed to IES is what? It's a business expense. It is a contribution to nonprofit. So from donor standpoint, if you are a business donating to IES, you know that is your business expense. And if you are individual donating to IES, then that is your contribution donation that you will put that on your Schedule A, right? So this is kind of, now you kind of see as a nonprofit, we have donation coming in. We also have people participate. Every part is related to taxes.
Absolutely, Ying. So when a company comes in and they want to be a vendor for and have a table at the event, what does that look like? Do we, if a company does that, is it a marketing expense? Is it a charitable contribution?
Yeah, such a good question. And, on the donation part, just, I won't be in great detail, but just remember, if you don't make money in a corporation, let's say you have no profit, and your exhibit dollars, if you classify that as a donation, it won't be creating more losses for you. So donation really is company donate when they have profit. So they reduce the profit, therefore reducing taxable income, right? And there's also threshold about 80% you can deduct or what. So just keep in mind that if you make that a donation, it's subject to how your company is running. So whether you can deduct it or not. But if it is a marketing expense, even if you have a loss, you can still do marketing expense deduction. It will make your loss bigger or make your profit less, right? So I would say that if it is a marketing expense, I will always go for marketing, then rather than classify that to be a donation. But of course, if it is a donation, you didn't even show up. You bought up this exhibit ticket, but you didn't show up. You're really just donating. Then that is not marketing expense.
Excellent. Okay, so then on the personal side, when somebody donates to a charitable cause that they're really passionate about, you mentioned briefly that it goes onto your Schedule A. Are there limits for that?
On the personal side of donation, and you know that if you finish your 2021 tax return, you already know that you have this $600 donation that come outside of the Schedule A. It doesn't get buried in there. And of course, there is a limitation. Let's say if you make $100,000 W-2 and then you are saying, I donate $100,000. No, you cannot offset all of your income by donation. So there is a limitation to make sure that you can only deduct a proportion of that donation, but it's not, you don't lose it either. You can carry that to next year. So donation is definitely a deduction, but may not come in as a full amount in 1 year if you donate excessively a lot.
Okay, that makes sense. And then what about kind of on a seller side, right? So a nonprofit might approach like a marketing company or something like that to they want printing materials, they want supplies. are we supposed to charge sales tax to a nonprofit?
Okay, such a great question. When a nonprofit going to buy things, for example, they go to buy office supplies, they go print their brochures, and if the nonprofit is classified as an educational institution, and like the universities and the college, they don't pay sales tax because they are the one that exempted from paying sales tax to the vendor. But if you are a Immigrant Entrepreneur Summit, we are a nonprofit, right? Oh, we do education. And so but we are not a educational institution. We don't issue credit for people to go to college, right? So because of that, we are just those regular nonprofit. And keep in mind that when you conducting business, you are no different from community CPA. You need to pay sales tax, you need to buy things. So you behave like a business when you become a consumer. Does that make sense? When you are a consumer and you are regular consumer, just like every other business, and unless you are a educational institution.
Okay, so what is the benefit of running a nonprofit, right? Does that mean that we don't make any money as a company?
Such a great question, Kat. I always tell people that nonprofit does not equals to not make profit. It doesn't equal. Nonprofit means none of your profit will subject to federal income tax. Okay. And having said that, that's why when you want to become a nonprofit, let's say Community CPA, tomorrow we decide to be a nonprofit. Okay, we're of course not a nonprofit, but we want to be a nonprofit. What do? We actually go to IRS to apply for that status. It's called exemption status. So you apply for exemption status. IRS look at your mission, look at your vision, look at your program goals. Yes, this is for the public welfare, and this is needed in a community. It is beneficial to the US citizens here, right here, for your community, and we approve your exempted status. When they do that, and you get a letter from IRS saying that your entity has been approved to be nonprofit. So now your profit is no longer subject to taxes. But of course, you can have, we don't call that profit anymore, we call that surplus. So of course, your surplus will be saved in the bank for the next year's operation, and you don't pay taxes for it. So this is, if you call it benefit, and why do I want to be a nonprofit? Maybe someone will say, oh, because you don't have, if someone says you become a nonprofit because you are not allowed to make money, that's why you are a nonprofit. That is totally wrong, right? And how could you run an entity and without making surplus? You can't grow. And even nonprofit will fold if there is no funding, right? So IES, Immigrant Entrepreneur Summit, from the beginning of the organization, it is Community CPA, Wells Fargo, US Bank. Those three entities are there from very beginning. So IES always had money. And not because IES made money out of the selling ticket. In fact, they don't. They always lose money if we talk like that. But IES has funders coming in to give the money so it can run this noble program, can help entrepreneurs. IRS goes, oh, if IES had a surplus of 20,000, don't pay taxes. It is your surplus. So I hope that kind of give you a good understanding of nonprofit, right? So you can call that a benefit because you don't pay federal taxes. But again, you have to get approved by IRS in order you to become that. You just not an automatic thing.
Right. So if those profits are not subject to taxes, do we need to file taxes as a nonprofit?
Yes. is not file taxes. We just don't call that way anymore, but you file what we call annual report. It is $9.90 for larger nonprofit when they receive more than $50,000 revenue a year. And it would be a simple postcard if you don't receive that much money and your nonprofit is really small and you file. And on May 15 is the first due day for nonprofit runs from January to December. Of course, nonprofit can be any 12 months. It doesn't need to be just January to December. So you know that it's a 5.5 months later after you close out the year. That's when you do for the first one. If your first one, you filed extension, then you have another 6 months to file that. It's called the secondary extension timeline. So normally it's May 15 and the 11/15 if you run January to December.
Thank you. So you mentioned a bit about this, but can a company become a nonprofit? Say they're a S corporation, can they become a nonprofit, or do you have to start a new one from scratch?
Such a great question. Any company can decide to become a nonprofit. It's probably I was trying to think of a good analogy. Let's not use what I'm thinking in my head. I was going to go on, forget about that. So the answer is yes, Kat. Any company at any given time can decide to become a nonprofit, but it is not the company's decision alone, right? You're going to write about what you do, then show that to IRS. IRS decide, okay, starting from January the 1st, 2021, you are a nonprofit. Then you will stop filing whatever taxes you are filing, 1120S, 11C, whatever you were before, and then start filing 990. Make sense? Yes, the answer is yes, you can absolutely do that. A lot of times I see small businesses, they're running for a couple of years, then they really becoming a nonprofit because the money they make is not there, but the supporters are so big and they come in, give the money to the nonprofit, then, give them the money to the business, then what are you going to do? Of course you're going to do, you will just turn around, be a nonprofit.
Right. So when we're thinking about nonprofits, I know that, oftentimes people are asked to be on a nonprofit board. So is there no owner for a nonprofit? How does that work? And what does it mean to be on a board of directors?
So obviously the board of directors in the nonprofit are the one taking responsibilities for how the nonprofit runs. So there is a thing about director in nonprofit, they all purchase liability insurance because if the nonprofit get into lawsuit or anything, the board members could be subject to that lawsuit. So it's a position that you take ownership. You know how in the private company you have the owner, then you have your rest of the folks. If something went wrong, company go belly up, is the owner's problem, not my problem, right? But in nonprofit is not so. The nonprofit is the director, it is the board issue. So selecting the board is really critical. But you may say that, well, can I just, can my husband be my board member? I'm the board member. My husband is board member. And my daughter, my son are 2 other board member. We have board member 4 of us. Is that okay? Is that appropriate? Is that legal? So the answer is IRS do not say that, oh, because you're my spouse, you cannot be on the board. No, anybody can be on the board, but the IRS do have a process for you to identify your relationship with each other. So there is no need to lie about it. And if this is your spouse, is your spouse. This is how your nonprofit goes. But your activities need to be documented. You cannot be like, okay, this nonprofit is just my family, so let's just forget about annual meeting. Let's not do things by the book. No, you have a nonprofit, so you want to do things by the book. even if you're related, hopefully you're still operating properly as a nonprofit. That's the only way to grow the nonprofit. I truly don't believe that if you already start cutting corners just because it's convenient, that is definitely a recipe of failing the business or failing your nonprofit. So really going by the steps and making sure you grow the company, that's the only way to do it. It doesn't matter who's on the board.
Okay. So I know that many nonprofits rely on grants as a way to get support. Can you tell us when a financial audit needs to happen and what parameters would be required for a single audit?
Right. Great question. So audit, right? Audit has a lot to do with nonprofit. A lot of nonprofit, when they have a certain size, they get audited. So here we are wondering at what moment in time if I have a small nonprofit, at what time I felt like, oh, I need to be audited. This is it is a decision the board would make. As long as you did not spend more than $750,000 federal grants, as long as the one who gave you the money did not say that you have to be audited every year, you really don't need to be audited every year. It is not needed, but a lot of larger nonprofit to satisfy the board, because the board coming in and meet, they want to make sure that expenses were right, people are doing the right thing. So they will say that we like you to be audited and presenting to the board an annual audit report. So those are the people who can ask for you to be audited. Number one, your board. Okay. And number two, the funding person, the person who gave you the money. Wells Fargo could ask Immigrant Entrepreneur Summit to be audited because they are a funding person for IES. Okay. Your funding person, your board, and your community who you are serving. People in the community could say that we know you got some government funds, but we don't see any benefit coming to the community where you guys are spending money. We demand to see the audit report for this nonprofit. So anyone, of course, IRS can audit you. IRS says, well, you have been filing note card for the last 6 years, and we think that you should be audited, and we want to audit you. At that time, IRS is coming to audit you. They don't even let you hire the third party anymore. But when we are talking about the board members, the communities, the federal agencies, when they ask you to be audited, they're saying to you that, hey, Kat, go to find a third party CPA firm, have them come to audit you IES and give us the report. You see, they are not the one to audit you. They just want you to go contract a third party, get audited, and come back with a report. Community CPA, we do a lot of those audits for nonprofit. And, recently, because of the RRF for the restaurant, some restaurants spending more than 750,000 in 1 year. It's a SBA money, it's a federal dollars. So that triggers them to be audited as what we call the single audit. Single audit doesn't mean one audit. Single audit means 2 audits get done in one time. That's why it's called a single audit. And the one is financial statement audit, then the federal grant side of audit. So it's governmental audit. And when people talk about single audit, it actually realistically means more money to spend for the audit, because your auditors not only going to do regular financial statement audit, they also have to do governmental audit. So it's like 2 audits in one. They call that single audit. And that's related to your federal grants, right? As long as the federal dollars come into your bank and you subject to the federal compliance.
Right. So as we're thinking about, you mentioned the financial statements, when a grantor gives you some funds and they say this has to be for a certain program or what have you. What are your recommendations in terms of booking those payments to show that you're doing what you say you are?
That is such a great question. When you have a nonprofit, a lot of times you get money from different places. They're not just all from Wells Fargo. They're not all just from Community CPA. They maybe come from a place where this funder says that I just want this fund to go to children. I'm just giving you an example, right? I just want to use this money to fund young entrepreneurs who has never done any business before. And when your stakeholder, when your funder, and giving you these kind of requirement, it is actually called the fund you got. It's called a restricted fund because you can't fund any other things. You can only fund specifically that. For that reason, in your accounting, you want to have a accounting that accounts for just that money. So let's say you receive $1 million in a year, but $500,000 is restricted fund, only funding for small business development, let's say. Then in your accounting book, you really should have two separate columns, and the one booking general expenses, any expenses related to that $500,000 and you spend for small business development side of things, then it will come out of there. So a lot of time when they give you the money, they already give you the budget. You probably submitted the budget yourself in the beginning. So they would look at your budget to say, hey, you said you're gonna pay a $40,000 on a full-time employee. Did you got that? And let's say if Kat, you decided, no, we don't need that employee anymore, then we need to go back to the funder to say that, is it okay? We don't hire one person, but we have collaborated efforts from different people come up to be the 40,000. So those are the things, restricted funds are in that nature. You have to spend the way the funder wants you to do.
Okay. Ying, is there anything else? I have one final question, but I didn't know if you wanted to mention anything else before we kind of wrap up.
I couldn't think of my rest of question. I want to hear your final question.
Oh, okay. So what do I do if I want to close a nonprofit organization? Like there's just, I'm on the board and we just don't have a lot of momentum going, and we just want to close it. What is that process like?
That's a great question for someone who wants to exit from their small nonprofit. Say you formed a nonprofit, you ran for several years, you really did not do anything and felt like, I need to close it. So remember, there's two levels of closing. So the first close you have is to close with the federal government. And you can wait for 3 years to not file anything with the federal government, then your nonprofit status, your nonprofit is automatically diminished. Because remember, there's a 3 years time if you don't file your 990 and you don't have that status anymore. And then if that is the case, you ignore the federal side, you can drag your time. Of course, the proper closing would be you go to federal government and write that letter, properly close that, file your last tax return. On there, not tax return, information return, on there, indicate this is the last year. So that's a proper way on the federal level. At the state level, you need to dissolve that with Secretary of State. And you probably say that, oh, I don't need to dissolve it. They forget about me in a couple of years. That is correct. If you don't do anything with your Secretary of State for your entity, it is automatically dissolved after 2 or 3 years, depends on which state you are in. And that dissolve called administrative dissolution. Administrative dissolution is equivalent to missing person. It's not a dead person, it's a missing person. So if you do not do anything with the state, then you are a missing person. And of course, it still come out purge out of the system, you're not there, but you're not there by means of missing. But if you want to do it right, you may think that, oh, I want to do it right. Then you need to file dissolution properly with the state, telling them that you're closing. Then, of course, you should close all the other permit with the state, right? Your payroll, your UI, and, I don't think you will have sales tax, but, all of these things you need to close. So that is really where I say 2 levels. Federal level to close, state level to close, and both levels you need your accountant because you need them to file your final tax return in order to trigger all of these level close to happen.
Well,
Easy, right,
so
Kat? Is easy as a piece of cake. Yes.
Yes. Thank you so much, Ying. I think this was very helpful for those who are in nonprofits or thinking about starting them. And of course, remember, please attend the Immigrant Entrepreneur Summit if you're in Minnesota. It is May 23rd. It's a Monday, and it'll be a full-day program. So it'll run from 8:30 a.m. to 3 p.m. and at the Hilton Bloomington. So we will look forward to seeing you there.
But yet you forgot to think of all the deductions that people would enjoy. We should say as long as you're in US or maybe you're on the planet anyway. If you come to join, and Kat, can you repeat the address again? I did not hear it really clear.
Yes, it is at the Hilton Bloomington in Minnesota. So it is at that venue, and again, full day conference. You can come, and of course, if you're traveling, you can deduct those expenses. If you're coming, you can deduct those as either a donation or as a business expense.
Yeah, and we want to thank the sponsors for IES to make the event available. And it is an event to teach you entrepreneurship. If you think that you don't know about how to start business and you need guidance, you want to find mentors, place to come. And I have never, I'm in business for all these years. Every time I go to IES event, I still learn new. So it is a great place to beef up your knowledge about business.
Yes. And just to put a final plug, Ying is also speaking at that event. So, of course, come to see her as well.
Yes, just for me, right? Yeah, I actually going to talk about recession prevention at that event. I tell you that I have done a lot of research to come up with my own thought, and also, of course, coupled with all of these years experience meeting thousands and thousands business. So I think my thought and experience would be very valuable, very valuable. We will ride over recession like nothing, and you will thrive when the economy is struggling, because that is how, in the way, that's how we rescue the economy. We got to have more people thriving than going down before the economy can recover. So we want you to be the one pulling it up instead of going down.
Right. And the event is all about growing together. So that is why
Yes.
we are, and yeah. Thank you.
All
Ying.
right. Thank you. Thank you, everyone. We will meet again on Saturday, 3:30.